Hey everybody, welcome to Options with Hans. As usual, I am Hans Albrecht, 15 years pro market maker, then a decade after that running a whole bunch of income and downside protect funds. So really kind of an exciting week, and I've seen certain things build up over time, as some of you have know from following me. I'm talking about things about 4 or 5 weeks ago, just saying, listen, pricing is very, very cheap. I felt it was absolutely incorrectly priced, given the potential and really what was absolutely going to happen because of inference. Now this kind of throws a lot of things up in the air. And so Micron is an absolute masterclass in how volatility can react in two different kinds of environments. Here we are, we had that really nice run, and then we paused a little bit after the earnings, 170, we came down to the 150s. I added more personally. I just kept adding because of the valuation and the fact that these guys are in an area that is really, really, really important. So, and then also we've got this whole government, America, get behind American companies. I think we benefit from that as well. And it's in an area that I think people are underrating in a way, which is memory. I'm a big fan of that sort of whole memory space. I mean, it is incredibly crucial to everything we're seeing. Okay, so we're looking at 9-month volatility right now. We can get rid of historical is not that useful. Somebody mentioned in Discord today, and it's if you long-term historical is just sort of it lags, right? It's looking at things on such a long period. It's like kind of like a 200-day moving average. It's not really giving you much positive immediate information. It's giving you very long-term information. I just don't find it very useful for historical. Now, when you look at implied, well, that's the cost of options right now. So it is very useful. We know exactly what it means. And let's take a look at we've seen the rank and percentile of these things going up. Look at this. So this is really what's happened is, a little horn tooting here, but I said over the last few months, I said, listen, this options are too cheap given what's going on in the world. They're too cheap given the potential for a melt up, the potential for AI to change so many things, the potential for things to break in some ways, for jobs to get affected, et cetera. So there's lots of things, and this was just too cheap. It was underpricing things, and I said you could win three ways. So you could win with your three Greeks, which is one is delta. That's your direction. So if you own calls, you benefit as the stock goes up. Number two, you benefit from Vega, right? So Vega is your exposure to implied volatility rising or dropping, in this case rising, because when option prices are low, certainly they can get lower, but when you're looking forward, as I have been, to what might be happening in the world, I said these are too cheap. And then the third way, you've probably heard me say this in a number of videos, is the upside skew, so that call skew getting excitable. Well, what's happened over the last few weeks is that's exactly what we're seeing everywhere. We're seeing people get excited as the market makes new highs, and people are starting to recognize, whether it's option markets, it's the collective sentiment out there. We don't always know where it's coming from, but the market is now saying, "Oh my gosh, this is a kind of situation that could blow up to the upside, to the downside. We could get a mania like 1999, like 2021. We don't really know where to price things. That's what I've been saying on Samantha's show. I've been saying, well, how do you even know how to price this market? We don't know how AI plays out, how inference plays out. We don't know who's going to figure it out, who's not going to figure it out. How do we know where the benefits are going to be, as well as the disruption as well? We know there's disruption. Software took it on the chin again in some areas because of the potential for AI to disrupt. So how can options be at their absolute cheapest in the last few years? It didn't make any sense. But now what we have is this Micron position. So even if you look, the amazing thing to me is that we're actually seeing this vol blow up. When I say vol, I mean option pricing. You've seen vol blow up across the board. This is very unusual. Usually you see option pricing move, the tail that is getting wagged is in the front of the curve, right? It's the 30 days, it's the 1 week, it's the 2 month, it's the 3 month, maybe it's the 6 month if you're lucky. To see long-term options do something like this is really, really something. So on our leaps, we are making, I did the calculation on the Micron position. I looked at one of my positions in my account. I'm like, I'm up $17,000 on like not even a very big position. And Micron hasn't even gone up that much. Yeah, it's had a little bit of a move since 160. And I did the calculation on where that Vega exposure is, right? So how much, I figured out, well, how much have I made from not just the delta, which is being right on these calls, but how much have I made from implied volatility actually rising? And it was over a third, right? It was about a third, about 35%. And so that's why I started to sell some of them, because I've made money where I didn't think I would make it quite as quickly. And even though I'm still very positive on the stock, we do have a market that is a little bit frothy. And I know you could say that, almost every week now. I don't think Micron's expensive at all. I think it's still cheap. But, at this point, I've made a good chunk of cash just on this sort of secondary benefit, even though I kind of thought it would happen. It's happened, and it's a nice added benefit. So I'd like to monetize that, because at this point, what can happen? Well, if the stock market calms down a little bit, and we don't know if that will happen, but if the stock market calms down, we may see this come back down to reality a little bit, maybe down to sort of, a better resting heart rate of, maybe like 47, 48, somewhere around there. 44 is going to be too cheap. I don't think it'll get back down there, but you never know. Going into Christmas and all that, anything can happen. But that's a long ways from now. So it could pull back maybe 3, 4, 5 points. And so I don't want to lose that, right? So I've made on that one position where I'm up $17,000, I've probably made about 6 of it on Vega, on option pricing going up, and the rest on Delta, and of course a little bit of Skew there, which is just similar to Vega, right? So the Skew is kicked up, the option pricing is kicked up. So I'm going to take some of that off the table, because it could calm down. This is really kind of an exceptional move. In fact, to give you an idea of how exceptional this is, the last time we saw a move like that was to the downside, not to the upside. It was to the downside when the market was crashing and getting crushed, and they were selling these things off very, very hard. Micron went from, I don't know what it was, 115 to 70. That's when the vol went up. Well, guess what's different about this picture? It's happening as the stock goes up. This is a new paradigm, and it's something that, even though we may be selling out of some positions, we want to be looking for the next opportunity at some point. There's going to be a lull at some point, and in my view, it's going to be an opportunity to probably add exposure to names that people are just going to, kind of maybe panic sell at some point. And that will be our opportunity to perhaps reload a little bit. So when the time comes, we will look at doing things like that. But this is really, really an interesting situation. And I'm a vol guy, so I'm looking at this going, wow, these are totally different environments. Yet we are seeing this incredible jump up in option pricing. So I think that's very interesting. One thing I will say is that I mentioned in my last video is that we want to start to look at other kinds of things, right? And so we got into IWM. I want to continue to look at broadening. I like the ARKG, so I like Biotech. You can do XBI for that. I think we want to look at other kinds of infrastructure plays as well. I mean, power's good. I mean, utilities are okay because of their exposure to infrastructure. So I believe there's going to be a very big boom in infrastructure that's going to continue because of this AI build out. So I think we want exposure to those kinds of things. So we're going to kind of broaden out a little bit and sort of watch the consumer, watch spending. It seems to be fine. Maybe we can even kind of broaden out into even some consumer discretionary things like that, but very different from what we've been looking at. We're not abandoning AI by any means, because it is still full speed ahead. But it is a market where I do believe we can get a little bit of broadening. So that's it. I'll leave the portfolio for another video. I hope you guys enjoyed this, and we'll see you guys in the chat, and have a wonderful rest of the weekend. And again, thanks for your support. Thanks for being in Leaps Trader. I really appreciate it, and we'll see you soon.